How I can invest $1 million internationally. My name is Newman Nabil bin Nazri, and I am showing how I would spend $1 million across international. Brunei, Botswana, Burkina Faso, $500,000 to a high income, $300,000 to an upper middle income, $200,000 to a lower income. Brunei Darussalam, 15.6 billion. Highest sector is oil and gas 47%. Invest in Brunei Sukuk Islamic bonds. Brunei has been issuing Sukuk since 2006, showing a well-established foundation in Islamic capital markets. Brunei potential risk is high dependence on oil and gas and energy price volatility. Currency risk. Mitigate risk. Diversify investments across multiple sectors and geographies to reduce reliance on energy revenues. Hedge currency exposure or invest via SGD-linked instruments to minimize FX volatility. Brunei potential challenges. Small domestic market and structural constraints. Weak private sector, entrepreneurship. Mitigate challenges. Partner with regional firms or focus on export-oriented sectors to access larger markets. Engage in public-private partnerships and invest in skill development to strengthen private sector growth. Expected return on Brunei Darussalam 3% to 5%. Based on fund $500,000. Lower risk investment Sukuk instrument. Botswana, 19.4 billion. Highest sector is services 59.4%. Invest in stock related to services sector. Financial services subsector under services. Now we go to potential risk in Botswana. First is sovereign credit and fiscal risk. And second is over-reliance on the diamond industry. Now ways to mitigate it by, mitigate risk. Diversify investments. Focus on non-diamond sectors such as tourism, financial services, agriculture, or renewable energy to reduce exposure to diamond price volatility. And, hedge commodity risk, for example, use financial instruments, e.g., options, futures, to hedge against global diamond price fluctuations. Potential challenges in Botswana. First is regulatory and bureaucratic hurdles, and second is lack of skilled labor and infrastructure constraints. Ways to mitigate is by invest with risk-adjusted returns and maintain liquidity buffers. Expected return from stocks in the financial services subsector of Botswana's services sector typically ranges from 6% to 10% per year. Next is Burkina Faso, the 23.25 billion and highest sector is services 43.64%. Invest in agricultural commodities in Burkina Faso, because based on data of the World Bank, it's stated that more than 80% of the population is involved in farming in some capacity. Potential risk. Burkina Faso has political risk and currency risk. Mitigate risk. Political risk insurance, purchase insurance from agencies like MEGA, World Bank Group, or private insurers to protect against losses from expropriation, political violence, or currency inconvertibility. Diversification of currency exposure. Spread investments across countries with different currency regimes to minimize the effect of any single currency fluctuation. Potential challenges in Burkina Faso is infrastructure and logistics challenge, and security and insecurity challenge, and ways to mitigate it by invest in local storage and cold chain solutions. Build or partner with local storage facilities to reduce spoilage and improve supply chain reliability. Next is conduct risk mapping before investing and focus on safer regions or urban hubs for operations. Hire local security and community engagement teams. Investing in agricultural commodities in Burkina Faso can yield an expected annual return of 10% to 15%, depending on factors such as crop type, market prices, weather conditions, and operational efficiency. This diversified $1 million strategy balances low-risk Sukuk in Brunei, growth opportunities in Botswana's financial sector, and high-return agricultural investments in Burkina Faso. Despite different risks, the allocation strengthens stability, captures growth, and maximizes global investment potential.